Thanks again for staying with Africa News Network, First Fast Live. Good evening to you. Now, one of the key resolutions taken on the last day of the 54th ANC National Conference is the South African Reserve Bank. The ANC decided that the Reserve Bank must be state-owned instead of private shareholders owning the bank. And the party instructed the NEC through government that they should now work towards the process. The central bank is currently privately owned, with majority shares being families and businesses based abroad. And there have been growing calls by certain pockets in society to have the Reserve Bank nationalized, including recommendations from the current public protector, Advocate Busisiwe Mkhwebane.
The mandate, I normally remind people who talk even within our ranks that we had a huge debate about the mandate of the Reserve Bank between 2007 and 2010. And Pravin Gordhan in 2010 extended the mandate of the Reserve Bank. If you follow his budget speech in 2010, you'll pick up that he mentioned in his budget speech that the letter he wrote extending the mandate of the Reserve Bank.
However, the Reserve Bank is not taking kindly to the suggestions. In a statement, the Reserve Bank Governor Lesetja Kganyago has warned that changing the bank's ownership structure at this time is risky, given the country's fragile economic situation. There's also a risk of further ratings downgrades if the Reserve Bank's mandate is altered. The Reserve Bank functions in the public interest, and the private shareholders have no influence whatsoever on the monetary policy. And lastly, Kganyago warns it will be costly for the state to buy out the individual shareholders. Joining us in studio, political and economic analyst Tshepo Kgadima, Tony Modise, market analyst on the phone line. Kgadima, thanks so much for your time. Just in all of that, the reasons why the Reserve Bank and all of it and its subsidiaries need to be left untouched. What is your view in the reaction from the bank?
No, I think the statement so issued by the South African Reserve Bank's governor, Lesetja Kganyago, I mean, there's no truth in everything that has been written there. And in fact, it is contradictory. And at the same time, it is perhaps forcing onto this government a macroeconomic policy, particularly the pillar of macroeconomic policy known as fiscal policy, which deals with the government itself in terms of its budget. For example, the governor speaks about the risk of credit downgrades or further credit downgrades. Now, South Africa, where it is today, in fact, a credit downgrade is no longer of any effect. It's reached its usefulness. And what do I mean by that? We are in the highest quartile in terms of costs of borrowing. As a country, we actually have been living well beyond our means since 1994. And there has to be a time whereby you have to forego that policy called deficit financing, whereby you've got this big deficit that is forever widening, and you fund it through borrowings or borrowing money from the private sector. And as you borrow money from the private sector, you're hoping that the credit rating agencies can give you a favorable credit rating in order for you to pay a lower interest on the money that you are borrowing. Now, that fundamentally is flawed, and we are seeing a Reserve Bank that is shying away from its own responsibility. And its own responsibility in this case, and as they are protesting that is constitutional, should have been that the money that the Reserve Bank creates as a direct result of a legislation empowered by the Constitution, that the money that they create, they should have been able to be the ones that are creating notes that then get borrowed to the state, which is the government, and then for the government to be able to do the things that currently the government is doing, what is going through intermediaries, through middlemen, known as the banks, who, after all, get their power to create money as delegated to by the Reserve Bank. So the statement is contrary. But where we are, I don't know where the relevance is of the credit rating agencies in protesting that the Reserve Bank should not be nationalized. It's absolutely got no relevance. And we have to get to a point, really, whereby the governor needs to be honest with the people of South Africa, because right now, there's absolutely no honesty whatsoever. One of the other things that is mentioned, of course, is the fact that they have got private shareholders, they say those private shareholders have got no bearing whatsoever on the operations of the bank. Of course, we would expect that. Shareholders in any company have got one role and one role only. They have an expectation for profit on their investment in any company, including the Reserve Bank. But also they carry an obligation to fund the enterprise which they are shareholders of. So a shareholder in any company carries that duty and that obligation to fund the company so that it can continue to operate and be sustainable. Now the question must be asked, these private shareholders in the South African Reserve Bank, what value are they bringing onto the South African Reserve Bank? Because they are not giving any money whatsoever to the South African Reserve Bank. The South African Reserve Bank is able to create money out of nothing through an instrument called credit, because of the system called fractional reserves, which means that we moved to the fractional reserve banking, I think by 1980, September,
it's
thereabout.
becoming a little bit too complicated for me in terms of understanding what this, how it impacts the livelihood, the material change in the quality of life of the majority South Africans. If we have a reserve bank that is essentially supposed to be where the banks and government is the first port of call if you wanted to lend money, and now you have the credit ratings and also, as you're saying, the debt financing that becomes even more expensive to borrow, why has this particular structure perpetuated if it's not working?
The structure is perpetuated. Nobody has been able to explain it because they know that it is not a structure that is in the national interest of South Africa. In fact, it is only there to serve the interest of other people who we don't know who, but none other than that. They're using the Reserve Bank as an instrument of control, where effectively, because sovereignty of a nation is expressed through the executive, particularly in a country such as ours, where you've got the separation of powers, or trias politica, meaning three branches of the state. So the Reserve Bank, by and large, because it controls the creation of money, and that creation of money, right now, we don't know who actually is the governor accountable to. There is a Latin saying, quis custodius ipsos custodet, who will guard the guards? Right now, we're sitting here. Who actually is guarding the South African Reserve Bank to ensure that the South African Reserve Bank, in its independent role in this economy, it is actually acting in the best interest of the country, and that has not been proved. So the statement that is coming out of the governor, if anything, it is dangerous because it is pulling us back as a country. If you are getting 200,000 rand dividend, the 2 million shares that are in private hands, they are attracting only 200,000 rand a year in a dividend. The question therefore has to be asked. They are saying that the shares, they've been trading at a lower price. Of course they have to trade at a lower price because there's no dividend yield, because the dividend which would accrue is so minimal. Therefore, nobody will pay more. But if we were to nationalize, and this is the point I want to make, Cindy, if we were to nationalize, there is zero risk whatsoever. In fact, all the benefits, because right now we are having economic difficulties because the bank is not nationalized, is not owned by the South Africans. And to buy out those over a 20-year, because when you are doing a discounted cash flow in terms of determining the net present value of what those shares should be worth over a 20-year period, the moment you go beyond 20 years, it becomes in fact negative in terms of your return, the rate of return that they are looking at. So we could be able to say, today as we sit here, over 20 years, this is how much we need to pay these private shareholders. And believe me, the amount of money that we will pay them will not even account to 20 million rand, because the question that has to be asked, what value have these private shareholders added to the Reserve Bank, but also what value are they themselves deriving by holding those shares which are paying such a paltry dividend of 1,000 rand for the 10,000 shares that they hold?
A status or prestige symbol? Tony Modise, market analyst, joins us on the phone line. The nationalization of the Reserve Bank. We also saw Public Protector Advocate Bosisiwe Mkhwebane calling for the expansion of the mandate of the Reserve Bank. It is no longer sacrilege to have to ask the question, what is, or to whose benefit is the Reserve Bank in its current form? Tony, in your view?
Mandate of the Reserve Bank is not really to make profit, and the shareholders of the Reserve Bank are not there to make profit. These are not the type of shares I will buy. as a trader. These are shares, these are honorary shares, which literally mean nothing to those shareholders. Remember, they have no say to the Reserve Bank at large. Whenever I share quite a different sentiment with Mr. Khadim at the studio. We had a couple of these conversations so many times. The Reserve Bank, whenever they print money, it needs to be approved by the Treasury. Whenever the Reserve Bank needs to bail out a bank, or whoever they need to bail out, it needs to be approved by the Treasury. So there's that correlation within these different departments. So now when we have to nationalize the Reserve Bank, the Reserve Bank has been performing within its mandate throughout pretty much this year. They kept the inflation within below 6%, which is quite beautiful considering the fact that we had recession. We also had credit downgrade. So they've been performing within their mandate. Now the challenge will be, it becomes a worry that's where it becomes a bit, this issue becomes quite fragile, where the mandate needs to move from the Reserve Bank, the duties need to go into the government portfolio. It creates a worry there if it will be taken care of as the Reserve Bank has been taking care of its duties throughout the years and throughout all this time where the South African economy had challenges.
Yeah, Tony, but my question is, I think let's just define the role of the Reserve Bank. If it's purely just for currency stability and also to keep the inflation within a particular target between 3 and 6%, then it's completely underperforming or underutilized. What else should the Reserve Bank, or is it capable of doing in ensuring that we deal with issues of socio-economic development importance?
They need to focus on inflation. Inflation is what will trigger economic development in the South African economy. Once the inflation is good, that means that there's more buying power. When there is buying power, that means that we will start having investors buying in. Now, if the government will have to buy out, they will have to buy out all of these shares, or 2 million of them, they will have to buy them out. And it will going to cost a lot more money again to purchase all those shares. They still need to have a new management in the Reserve Bank, which is going to create uncertainty in the South African economy, and investors will not be able to come into the South African economy again. We'll start having problems, our problems in the South African economy will keep on escalating. We won't reach any stability once we start focusing in this. Government already has enough in its plate. Government already needs to focus in what they have in their portfolio. Rather, I would advise the government, they can rather take over the Reserve Bank regulations. Let them regulate the Reserve Bank. Let them take care of their regulations, and then everybody now, they can focus on their duties.
All right, Tony, please stay on the line. What are the benefits, as you were saying, or maybe the mechanisms of how nationalization of the Reserve Bank ought to play out so that we do not destabilize the economy?
No, I think you need to go beyond just ownership in terms of effectively taking out or buying out all of the private shareholders, and it can never be a lot of money for the reasons I've adduced. If you've got a set dividend of 1,000 rand, regardless of inflation, regardless of the time value of money, that it is 1,000 rand into infinity for every block of 10,000 shares. That is the price. I can't pay more than 10,000 rand or 1,000 rand for each block of 10,000 shares, or I cannot pay more than 200,000 rand. And it doesn't matter if I do a discounted cash flow model over 20 years or over 30 years in terms of what dividend would have accrued to these private shareholders, because it is set. Therefore, the question that must be asked, which they have failed to answer, by the way, even the private shareholders, why is it so important for them to be holding these shares, other than the fact that these shares give them a seat at the table to be able to now to start determining the functioning of the Reserve Bank inadvertently through the back door to benefit their other interest on the outside. When you look at the function of the Reserve Bank, including the fact that the private banks, all of the big four banks, have got representation on the board. They are able to elect who is going to be on the board of the Reserve Bank. I think out of the board of 13, 7 are elected by the state, and then the rest are elected by the private shareholders. Now, that itself is an unhealthy relationship. So you have to collapse that edifice of corruption, if I can put it that way, because the Reserve Bank is not acting in our best interest. Now, so I'm saying to acquire all of the shares of the Reserve Bank, it cannot be a lot of money because there's nobody anywhere in the world who will be able to produce a valuation report that can say the price tag is prohibitive. So let's put that one side. So it is doable on that regard. But let's look at now the mandate of the South African Reserve Bank. I'm saying you have to go push further and say it has to be amended on a number of fronts. One of the issues that it has to be, and it was none other than one of our leading financial minds in this country, Professor Robert Vivian from the University of Witwatersrand, who actually questioned the interest charged by the private banks. That why are they charging interest on the money that they loan to you and not charging a management fee or a handling fee? More importantly, because they're functioning through the fractional reserve banking system, meaning that they loan you money, they create credit, and that creation of credit, you create money out of nothing. Because that fractional reserve banking means that the rest of the money that is supposedly there, it is not there. It's sort of a perception. If I went to the bank tomorrow and say, can I have a run-in on the bank? Believe me, the banks will not be able to have all the money to give to the depositors and the lenders. And already they have created this. Let's take Steinhoff, for example. It was worth, what, 380 billion or whatever that was lost. And at one time it went down. Was that physical money that was lost? No, it was not physical money to the extent of what the people that had put in their money that it was worth. If they had put in R1, it's now worth 10 cents. But then the valuation, which would have been the profit or the upside there, that itself is what was questioned to say from whatever the capital was to that difference, what underpinned that difference. And the banks are working the same way in terms of creation of money through creation of credit.
Just very briefly, nationalization of the Reserve Bank, good for the economy, good for social development and the development program that we have. Just very briefly.
Very necessary, very urgent. It must be done like yesterday. And the markets right now have not taken the ANC resolution seriously. So it has to be seen whether or not this National Executive Committee that has just been elected will indeed have the gumption to bring to fruition this resolution, because that is what our economy needs. All the other things that the governor refers to, they are peripheral and irrelevant to the discussion at hand. And it's about time that self-preservation of the Reserve Bank executive must come to an end.
Tony, your quick response, yes or no, nationalization of the Reserve Bank?
It is really not necessary, and it shouldn't happen. It is going to take back our economy, so that we cannot afford that at this moment.
All right, we're going to leave it there. Gentlemen, as always, thank you for your time. That's Tsepo Khadima, political and economic analyst, joining us in studio. Tony Modise, market analyst, on the phone line. And looking at other economic stories or business news around